Welcome back to Overtime. Hinge Health moving up by about 8%. The company did beat on revenue and gross margin during its first quarter as a publicly traded company. Also guided higher as well. Joining us now in a CNBC exclusive is Hinge Health CEO and co-founder Daniel Perez. Daniel, first report as a public company, revenue up 55% when the street expected 40. You're guiding to 41% growth in revenue at the midpoint, well above what the street expected. Non-GAAP gross margin at 83% was better than the maybe 80-ish expected. Tell us what you saw on the ground in the business that led to the outperformance.
Well, first of all, thank you so much for having me, John. And look, what's driving our results is, we're seeing a lot of great momentum on our commercial execution and our product innovation. And on our go-to-market, we're seeing a lot more eligible lives from both new and existing clients. We're seeing a better than expected enrollment from customers who have bought us. That is, more of their members, their employees, the spouses and dependents are signing up to our program, which means more people are benefiting. And on the product side, our product innovation continues to accelerate. We're, continue to keep our members engaged and satisfied with our program. We've been shipping a lot of new end user value, particularly around our AI initiatives and some key efficiency gains as well. We also just launched an in-person provider network, combining our digital programs with in-person care. So we're really excited.
So for the folks who might have forgotten, since the IPO, you guys deal with musculoskeletal issues, allowing people to get treatment at home and virtually through technology, et cetera. And you announced Hinge Select coming up that it sounds like is going to allow people access to some kind of bespoke in-person care, but at lower rates than they might otherwise have to pay. How is that going to add to revenue and when?
Great question. So look, first of all, about 1 in 2 Americans do have a musculoskeletal condition in a given year, and about 9% of people see a PT. And so we've been able to show that, there's a lot more demand for PT than there is availability or people's ability to see it for cost reasons, for convenience reasons, et cetera. And so we've done a really good job of giving people access to digital physical therapy. But the fact is, sometimes you do need to see a provider in person. Not all aspects of care can yet be automated by software and connected hardware. And so for folks who want to see a provider in person, say you felt a pop in your knee playing tennis, or you really injured your back horsing around with the kids, we now give people access to in-person care providers. And for folks on a non-high deductible health plan, we're able to waive the copay. No cost, no copay, no cost share, no co-insurance. And people on a high deductible health plan, we're able to give them much lower fees. So we're negotiating rates that are between 30 to 50% below normal insurance rates with in-person providers. We already have 2,100 clinics nationally that are in our network. We've signed many more just in July, which we're excited to share in our next quarterly release.